Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, November 9th, 2016. Starting this video, it's 3:18 p.m. Eastern Time. I'm still, for those of you that watched the video yesterday I did on the cannabis stocks, the marijuana stocks, I'm still under the weather. Went to the doctor today, and she gave me a few things to help clear up my head. So if I sound a little nasally or trip up my words, I'm a little groggy right now. But there is some things that I'm noticing today. I'm struggling to kind of get my hand around this market. There's something that doesn't feel right, and by that I just want to say, just because the market's going against where I thought it would today, doesn't mean that that's not the reason for thinking there's something wrong. There's something not right with this market. In fact, it reminds me a lot of Brexit. If you guys remember Brexit, nobody expected that vote. The market sold off right afterwards, had a very sharp, powerful sell-off on the surprise vote, then turned around and near vertically shot up, racing all of those gains and much more. This is a lot like it could prove to be Brexit in reverse, where we have this odd rally afterwards, 1-2 day rally. We're having a not a huge rally, by the way. The broad markets aren't rallying huge. The small caps are, and I'm going to address that. It's taken me throughout the day, the time that I've been in front of my desk, to go through the charts and sort of figure out what's going on here today. I made mention in the trading room, I am not chasing breakouts. Even that CARA Biotech stock I like took out the 940 level that I was talking about, but I'm not adding to it yet. I'll be honest, I actually added to short positions today with as little dry powder as I still have, and I'm pretty much pretty heavy short here right now. But that's just me. Do your own thing, trade according to your own plans and what you see. All right, let's dive into it. I'm going to tell you what my thoughts are here, and I made mention in the trading room. Somebody asked about XBI. Obviously, I've been watching the biotechs today. I'll make some assumptions, but and if not, you can check this. I'm sure everybody heard leading up to the elections, there was a lot of chatter in the media. What sectors would benefit from a Hillary win, which would benefit from a Trump win. And the big theme that I kept hearing was healthcare would benefit from a Trump win because the talks to undo Obamacare, whereas Hillary, everything would be status quo. Now, healthcare sector is a very broad sector. There's a lot of subsectors within within the healthcare industry, I should say. You have hospitals, pharmaceutical companies, biotechs. You have companies with various business models. So it's not a birds of a feather flock together type thing. The healthcare sector, as I said, is very large and diversified with different subsectors. So now let's take a look at the biotechs. And there is a point where I'm going over the biotechs, and I'll wrap this up fairly quickly with what I'm seeing in the broad markets today. Okay, this is XBI. There's several biotech ETFs out here, but this is the one I like. It trades the Spiders S&P Biotech ETF, or the Spiders S&P Biotech Index, as does the 3-time leveraged ETFs that I know so many of you like to trade, LABU and LABD, the bullish and bearish 3 times leveraged. They track the same index. So if you're going to trade those two, use XBI, not IBB or PBE. Those are different indices with different makeups, although they'll roughly move together. So now let's take a look at this. This is a daily chart. I have a lot of lines here. It's a little bit busy. You can see we had this wedge, a breakdown, very impulsive selling leading up to the election. Now just nothing short of an explosive move up. The sector as a whole is up almost 12%, 11.5% as I do this video. Let's take a longer term chart. I'm going to make my case here. This is my long-term chart of XBI where I've made the case. A video was done back here in 2015, making the case for a new bear market in the biotechs. That played out. We profited very well from a lot of individual shorts, as well as a short on LABD, that 3-time long. And then we closed them out. We've traded them since, but I've stayed for the most part away from the biotechs for most of the year, both personally and as official trades. And more recently, I've done an update on the biotech sector. You have this long-term, what I call primary bull market uptrend line. Yes, the bull market started back here in 2009, but this is where the biotechs really took off. And you have a well-defined trend line and an impulsive break once that went down. As I pointed out, there was a 50% retracement. So that big move down, as big as it was in the biotechs, this move up throughout 2016 so far really only retraced 50%. So very easily, if you take a look from a longer-term perspective, this is a 10-year weekly chart, it is very possible, only time will tell, but very possible that this is nothing simply but a counter-trend rally, within a larger new bear market. Forget about the percentage gains. Don't get tied up in the fact a bull market is a gain of 20% or more. A bear market is typically a drop of 20% or less. This bull market in XBI, from the lows to the highs was 528%. And yes, the move down was very powerful. There was a drop of about 50%, showing 49 right there. Again, it's all relative. The biotechs move a lot more than the S&P 500. So that goes both up and down. So the bigger picture, possible, cyclical or secular, I should say, bull market with maybe a cyclical bear market within there, and then a cyclical bull market or just a counter trend bounce within a larger market with more to go. We have this bearish rising wedge. We clearly broke down. We're not even back testing the wedge yet. There's still more upside if XBI wants to come in and back test this rising wedge from above. Again, anything goes, but let's watch, see what happens there. And should they break down below the recent lows, I have a line here, pretty critical support 47.29. They pierced through there briefly intra-week, but that's where a lot of the reactions, a lot of the support held around that 47 level. But the under 45, they're pretty much done if we get down there. And I don't want to spend too much time on this chart. One more thing I'll point out. One thing I like to see for a lasting trend reversal is, some bullish divergence on the weekly chart. We didn't see any of that at the lows in the biotechs. Now, let's take a look at my theory here. Okay, so going back to what I said, there's been a lot of talk and hype how devastating Obamacare would be for the healthcare sector. Let's forget about the healthcare sector for a second. We're focused on XBI in this video. So here's a chart. Let me pull this over here if I can. Here's a chart of Obamacare, a timeline, if you will. And it pretty much shows back in 2010, March, President Obama signs the American Care Act into law, and back in 2012, we remember that the Supreme Court upheld that provisions, and so then everything moved forward, and that's so we've had Obamacare in place now for quite some time here. So you can see all the the timeline of the Affordable Care Act all listed there. Okay, so 2010 March, that's when it passed. Well, what did the biotechs do since 2010 in March? That was right about here. There we go. So sometime in March, it looks like they had an initial hiccup from there. If I put my crosshairs here, that was in April. So once it passed, a little bit of a hiccup, but that's really right about where the bull market started. Yeah, I have the trend line here, but from that point, we'll just grab, I don't know what date in March it didn't stay on there, but it stayed on there. I'll just grab from here, March 5th. The biotechs embarked on a bull market run of over 360% from that point. Didn't even look back, had a little bit of a hiccup here. So by this logic, I don't see Obamacare or the Affordable Care Act being anything but net bullish. Whatever the shakeout was, whatever the interdynamics are within the healthcare sector, the biotech sure didn't have a problem with the Affordable Care Act being passed. And so this, was pointed out in the time. I made the case. This was just a fact. They were way too ahead of themselves, extremely overbought, extremely overvalued. The charts were bearish, and we had that correction. So back to where I'm going with this today. So here's a rally of 11.32%, which I don't think anybody can argue that this is not 100% Trump related. Maybe there was something in the charts. I do have a few that were setting up. We had, there's a support level you can see right around $53. And maybe if I zoom in the 60-minute charts, I know there were some patterns, some biotechs that were setting up somewhat bullishly. But again, 11, better than a 11% rally in one day. You have to say that is largely, if not exclusively, attributed to a Trump win, which, he's talking about undoing undoing Obamacare. It doesn't seem to have an effect. If anything, whatever the dynamics were with the Affordable Care Act, it seemed to have benefited the biotechs for years and years after it was implemented. Therefore, I think this is just I don't mean to really offend anybody here, and I may be wrong, but I think these are just an overreaction to people that are maybe not that informed on what the true impact would be. And guys, think about it this way. Look how long it took to get that passed. Think how long it would take to get that undone, to unravel everything in the system, to completely abolish and erase everything. And again, even if it does, will it have a material impact on the biotech? So no, I think this is an overreaction. I think this is a combination, maybe some short covering, but a lot of I think it's a lot of the my take, and again, maybe I'm the dumb money, but I think a lot of general public that thinks that this is extremely bullish, that listen to the mainstream media talking about how bullish a win for Trump win would be for the healthcare stocks. And now let's wrap up with my point here, all right, with the markets, where it relates to the broad markets, whether I'm right or wrong on my analysis. This is the QQQ. I have different boards here. Let me find one I like for you. Okay, this is a simple one of the clean boards, just showing that 115, 75, 116 level. You zoom in, there's two lines there. We broke down, we regained those levels, and they acted as, once we regained them on back tests, they held support. Technically, that's bullish. I cannot slice or dice that any two ways. We've regained that level. We regained it for more than just a day or so. We're still, as I mentioned, 117.50, I think it was, is what I said before when I put on the QQQ short trade. That would be a stop based on the daily closed. As I said, I suspended those stops due to all this post-election noise. I refer to the term noise as volatility. I still have almost all of my short and intermediate term trend indicators on both the SPY, the NASDAQ 100. A lot of trend indicators remain short and intermediate term bearish right now, despite today's advance. There's also resistance. I don't have it on this board. I put it up that 117.50-ish level. You can see back here quite a bit of reactions. But again, not really. I didn't want to do an overview on the broad market here. Let's take a look at my watch list. This is the component. There's 105 items in here. I'll put this up where you can see down in the corner. You see 105 items. So the NASDAQ 100 is really made up of 105 stocks right now. I usually sort this list by market cap. I do that because, as I talk about, the NASDAQ 100 is a market cap weighted index. You have just the top 10 stocks alone make up the bulk of the returns. You have your mega behemoth, mostly tech companies like Apple, Alphabet, the two share classes of Alphabet, GOOG and GOOGL, Microsoft, Amazon, Facebook. You guys are familiar with that, with the NASDAQ 100. Now, what stands out to me? We have a pretty decent rally, 0.5% rally in the Qs, yet all those leading tech names, Apple is down, Google or Alphabet is down by 1%, Microsoft is down by 0.75%, and this is as the market is punching up to its highs of the day. Amazon, the king of all these stocks, one of the last of the holdouts, down 2.3. Facebook, Intel. Okay, you see the common theme here? Just about all things tech or non-biotech related are trading down today. The only thing buoying this market, for the most part, are the biotech. So here's Amgen, there's Gilead, Celgene. Again, these are ranked by market cap, so these guys have a pretty big weighting, even though they're we're getting towards the end of the top 10 here, and I think Gilead's just outside of that. Celgene. Another way to do this to prove my point. Let's flick this to sort this by percent change. Now we're going to go through these again. I just sorted the NASDAQ 100 by the highest percentage gainers. And we'll run through these real quickly to drive home my point. Regeneron Pharmaceuticals. There's a biotech. Insight, biotech. You can see down here, when I click through, you can see the name of the company, the sector, and as well as the industry. Biotech. Biotech. And again, I'm going down the line here in order. Biotech, 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 Biogen, is a biotech. Down the line. Okay, so if my point's not made there, I'm going to make it even a little more clear here. So clearly, as this illustrates, when you look at these gains, and if you're good with math, you know what the weightings do. When you have a pretty heavy weighting, a lot of these companies are big mega caps within the top 10 or top 20%, and they're the ones virtually solely responsible, not 100%, I'm talking in generalities, but for a large part driving the gains in the NASDAQ 100. Now, what stands out to me today when I look at the markets, this SPY, the S&P 500's up a little as well, but IWM is on fire. The small caps are on fire. Let's sort it by market cap. What do we see? It's funny because when I go through the IWM, a lot of the names that I've recently posted as short trade ideas, Advanced Micro, there's a semi down today. Couple others I had here. There were some that I wanted to cover that was actually in the NASDAQ 100. Forgive me, my medicine head is kicking in here. But now let's make a point here. What's driving the small caps up so much today? I'm sorting again by market by percentage change now, away from market cap by percentage change, and let's go through here. So what do you see? Drug manufacturers. There's healthcare. I'll go down the line. Biotech. Biotech. There's a couple oil and gas in here, metal fabrication, but for the most part, you're going to see a common theme: biotech, and I'm talking these are up double digits, 32, 30%, 20 something percent. Go down the line, you're going to see that is what is responsible for, if you have if you're super smart at math and you do the math and add up, there's 1,979 components in the Russell 2000. So good luck if you want to add them all up and try to put a weighted average in. But I can tell you right now that biotechs are very largely responsible single-handedly for the gains of the small caps, as well as I mentioned, of the leading index. Now, the small caps are going to lead. I don't care really day to day what the small caps do, because I can tell you when the large caps roll over, when the S&P 500 rolls over, as well as the QQQ, that's when the entire stock market rolls over. And kicking and screaming, they'll drag the rest of the indices down with them. This is what I wanted to talk about. I go back to the Qs here. And you can see that there's a couple. Give me 1 second here. Okay, what I'm looking at here, what stands out to me, if you guys recall, a lot of the short trade ideas, I continually reiterate that for the most part, I stay away from shorting the broad market, especially the S&P 500, because you have the good and the bad. You have stocks in there with good charts, stocks with bad charts. You have dividend-paying stocks, defensive stocks. The Nasdaq 100, if I'll trade an index, it'll usually be the Nasdaq 100 or the small caps, because it's concentrated. It's mainly tech and biotech stocks. Now take a look at what's with the market being up today. These are all the names that I've recently shorted. I'm personally short a lot of these. These were official and or unofficial short trade ideas on the site, like Applied Materials down 1.22%, Activision, ATVI down 1.76%. I didn't go with Tesla, but there you can see Tesla's not up today. That's a big stock. ISRG, I've been bearish on the medical device equipment makers. There's a subsect of the healthcare sector, and this goes to show, you go through here, and a lot of these medical device stocks are playing out as expected. There's ISRG almost to the first target now, and that's an official trade idea on the site, one that I'm personally short. And I go down the line, there's some others out there. So my point is, security selection still works. Sector selection still works. What we're seeing here today is, I think, an overreaction on the biotech stocks. I don't have a magic ball. I can't tell you if there's going to be follow through. I don't think so. It's probably, some people asked in the trading room, hey, Randy, it's a good time to short the biotechs. Absolutely. If you want to, if you're aware that, excuse me, it's a catch, a catch a knife in reverse scenario. It's up so high. It's certainly aggressive trade, but if you want to take a pot shot at a short trade here, thinking those gains may be faded. Now, it may take them a couple days or so to fade the gains, but my guess is by tomorrow, the smart money is going to come in here and sift through all this stuff, the overreactions that were bought up here, and if the biotech sector is heading lower, a lot of those gains will be faded and then some, which will bring the market back down with it. So that's the gist of this. I just wanted to point out and illustrate, because it takes a video like this to kind of drive home the points that the Obamacare was, if anything, beneficial, at least reflected in the stock prices in the returns of the biotech sector, and B, the biotech sector of every subsector in the healthcare sector is up the most today, exploding up over 11%, and as I just illustrated, is largely almost exclusively the driver behind the gains in the leading index, the NASDAQ 100, as well as the small cap index, which is up tremendously. And with the small cap index, you just have the market cap on those biotech companies within that, the IWM, are much smaller. Therefore, they react much greater to buying pressure. Just like those cannabis stocks we trade, those are penny stocks. It doesn't take a whole lot of buying You or I with enough money can single-handedly move a penny stock that doesn't have much of a market cap. And so that's why in the IWM, a lot of those stocks are up, high 20s, 30% or so. And again, so something to monitor. And like I said, if I see an opportunity, an objective opportunity to short the biotechs, I don't think I'd be going long at this point. I'll let you guys know. But again, my views on the market haven't changed, and this is one reason I pulled the stops on that official QQQ trade. And I can tell you as well some other trades, but overall in balance, a lot of my positions are doing well because I'm, as I just went over, individual security selection. Those individual stocks, their charts speak for themselves and are playing out. This is just sort of a distortion today with this crazy phenomenon going on in the biotechs. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.